Hello everyone, going to make a quick video. It's been a while looking back at the S&P 500 index. Today, of course, is January the 12th, 2023. 2023. We're in a new year, so let's go ahead and see what's going on. It's been a crazy year. We finally had a down year, right, for the S&P 500. We've had a couple years in a row of just crazy growth, right? We finally had a down year, and here we are starting out this new year. So, everyone's hopeful, wishful even. So let's just look at. We'll start with our usual. I like to follow the same format, and following the same format each time, you can at least analyze similar results. If you don't follow the same format every time that you're looking at stock, then you can't really, your results are always new. They're not relative. I want to know, relatively speaking, where we are. So let's go ahead and do this. We're going to go ahead and add a moving average. Not just like using simple, just regular, regular moving averages. So it doesn't have to be weighted or anything. It's going to give me exactly what I want. I'm going to use 3 of them. For stock, whenever I'm looking at equities, I like to start off with we're going to do a 10. I'm going to turn that 10-day into, I want the 10-day to be green because that's my go. That's my buy, my short-term buy indicator. We're going to turn this next one into a 20-day. It's like a monthly, not 220, it's a monthly, so that when I'm looking at the monthly, it gives me something to compare against that quick one, that relative one, which is the smaller 10-day. And then I want a 60-day so I can look at like a 3-month range. Because I'm never really looking to, I'm much more of a trader, not a what do you call it? I'm not a long-term investor. I don't claim to be. I trade options more than anything, and options have an expiration date. More often than not, I'm trading shorter ranges. So we can just look right now. We're looking at a daily, and on the daily, we're in a scenario where I don't know if you guys could see this, but we're in a scenario where the 20-day, the 60-day, that yellow line is higher than our 10-day. And the 10-day is higher than our 20-day. So what that means is right now they're all kind of converging. We are possibly in a changing of the guards, meaning that we're starting to look bullish at the beginning of the year. Now, to be fair, let's do this real quick. We're going to do a quick, I want to show you guys something. There's this idea called the January effect. And what that essentially says is every year in January, we get an up move, right? So let's look at the previous Januaries. I've been meaning to do this and hadn't had a chance to, so appreciate you guys doing this with me. Let's look at previous January. So wow, January of 22 was actually not a no January effect there at all. That was yuck. So let's look at January of, obviously the previous two, January of 21 was going to be a positive move. So one of the things I love about using TradingView is it really does let me have a lot more control, a lot more freedom as to how I analyze different time frames. So, look at that January effect. Normally, we see an up move, and I could keep going. January effect, even in 2020, was great. Prior to that's the COVID drop. You can go back to 2019. January effect would have been positive. 2018. Oh, look at that. January effect was great prior to the drop off there. So see if I can isolate that. I think things like, holy crap, look at that. Sorry, you guys, I hadn't looked at this in a while, but what a nice move back in January of 2018. So, and then, man, I'd have to go back and remember And actually, you know what? That's not fair because I'm only looking at the first half of January of 2018 because the second half was nasty. Wow. I don't remember what happened here. I'd have to go back and look. That shows how short-term memory works, I guess. I can't even really get that in. But anyway, always good to know your history and what's happened before, because it can help speak to what is possible right now. So let's get on back to our current time frame. I'm gonna get rid of some of these previous charts that I drew on here. I don't have to, but I do like starting off with a clean slate. So pull that back there, stretch that on out, let us look. So right now, starting off positively, and man, that 2018 is an ominous. That was an ominous chart to see it go up so much and then crash the second half of January 2018. It's funny how, like, I just don't remember what happened back then. Normally, I'm really good at that. Let's change our time frame up like we did in the other video. So we started off with the daily. I'm going to drop this down to a 4-hour bar, which means that every 6 bars, of course, is a day. It gives us a little tighter range to also start to analyze what's going on at a smaller level. So you can see back here on this would have been last Thursday, January the 5th, is when on the 4-hour range we saw the 10 period cross over the 20. So we started to see this short-term up move that we're looking at on the daily. Let's drop this down to hourly, and that'll really make it clear. On the hourly, you can see that all three have already gone positive, and that would have happened last Friday. So on last Friday at the hourly level, the 10-day or the 10 period came up above. Now, it did have a little bit of a pullback. And one thing I'll say is if you trade, like, the tighter the range or the smaller the time frame that you trade in, the more you have to give each of your indicators a little bit more room to breathe. You can't be kind of jumpy with them because you'll end up trading against yourself. So you had a nice crossover. This would be just Tuesday of this week. So a couple days ago here, you had another crossover of the 10 and the 20 there, but both are still well above the 20 period. And then you got a little gap going into Wednesday morning. Of course, today is Thursday, and you can't just be sort of like really, you can't be too trigger happy on these. But this looks really good. So let's go ahead and get rid of we're going to drop this back down to the daily. Otherwise, this video will be forever. I'm going to get rid of my moving averages. I like to add in a little bit of we'll go to the indicators here. We're going to toss in a little MACD just to get a sense of what's going on. I like looking at my MACD. I don't normally change it around too much, but you can make the MACD a little more or less sensitive. But I just sort of use the default settings. Basically, the MACD uses a MACD line, like there's an actual MACD line, and that's in blue, versus a simple kind of not a simple, it's a weighted moving average. It might even be exponential. And I give a great explanation of it in a technical analysis video, a longer video that explains all the indicators that you can find right here on this channel. So you can see, now let me expand it in. You had a nice crossover here of the MACD line, which is the bullish indicator that we look for. Let's go ahead and drop that down from daily to the 4-hour. So at the 4-hour range, we saw that crossover start back in December on Wednesday the 28th. So that would be a couple weeks ago. Oh, don't want to do that. Let's drop it down to the hourly. Actually, I want it the 1 hour. And I look at different frames. So crossing frames time frames allows me to look for any issues that might be coming. So you'll see these indicators switch over at the lower time frames faster than they will at the larger time frames. So some guys, if you're making longer term equity plays, you might consider just using a weekly chart, because weekly charts, which is what we're looking at now, can give you a nice indication of a longer move. And some guys will even switch it up to the monthly. So and you can see at the monthly level, this thing went, oh my gosh, this thing went negative, right? The MACD went negative back in March and hasn't pulled positive since. So, I mean, you've got to have really, I'd say, longer money, a longer viewpoint to trade MACD at the weekly level. At the weekly level on the MACD, this went positive back in definitely crossover in late October, arguably the first week of November, and has been positive since. But I do like the daily. As I said, I'm more of an option trader. I tend to trade monthly and weekly options, so I need a little bit more time frame. I'm a lot more sensitive. So that's it. You know what? I'm going to wrap up today's video right there. I also am going to be letting you guys know about a webinar I'm going to be hosting this upcoming weekend that just shows how I trade. It's sort of the basics of option trading. So if that's something that you're interested in, definitely look for tomorrow's video, because I'm going to have more details about that in the description of the video and on the video itself. All right. So hope you have a great day. Happy trading, and I'll catch up with you tomorrow. Take care.